Oh, happy days, happy days. Gary Gensler has officially stepped down from his role as SEC chair. While this alone is a huge triumph for the crypto industry and should cause for celebration, unfortunately, there are some crucial things we need to address before popping the champagne. Known for his strict and contentious stance towards the crypto industry, Gensler's regulatory crackdowns on the space were the cause for a lot of turmoil and controversy. In this video, we're going to be exploring the most controversial actions Gensler's SEC took towards the industry over the last 4 years, as well as their lasting implications on the space. Because while there is a lot of promise for crypto in 2025 with Trump's new SEC chair Mark Ueda and other pro-crypto members of his administration, the actions of Gensler's SEC unfortunately may have already done irreversible damage to the industry. So without further ado, let's do a deep dive on who exactly Gary Gensler is, what his stance on crypto has been, as well as whether or not there will indeed be hope for the industry going forward. Gary Gensler was appointed as the chair of the SEC in February of 2021 by the Biden administration. Despite all the controversies he's caused in his role, Gensler is no stranger to politics and economics, having served as the chair of the CFTC under the Obama administration. However, prior to his tenure as SEC chair, he actually taught as a professor of global economics and management at MIT. And funnily enough, this is not a joke, Gensler actually taught a highly popular course titled Blockchain and Money. And you can still actually watch this lecture to this day on YouTube. This course did a deep dive both into the technical and economic aspects of the space. So if Gensler is so well informed on the matter, why was he always unable to see any of the potential benefits of blockchain technology and instead took such an ineffective yet hardline stance on regulating it? You see, the SEC's general mandate as an institution is to protect investors, maintain fair markets, and facilitate capital formation. However, as you can see from my air quotes, during Gensler's role as chair of his agency, he didn't really manage to successfully do any of this in the US crypto industry. In his second year in office, 2022, we saw the collapse of major crypto projects like Celsius, FTX, and many more, which resulted in US investors losing billions of dollars. If Gensler was so keen, shouldn't he have been able to prevent at least some of these events from happening in order to safeguard investors he swore to protect? No. Instead of rooting out the true corruption that plagued the crypto industry during that time, Gensler decided to take another approach. In 2021, Gary Gensler described the crypto market as the Wild West, and back then, honestly, I would agree with him to a certain extent. He claimed that the asset class is rife with fraud, scams, and abuse in certain applications. But legislatively speaking, his practical view of cryptocurrency is essentially that most of them qualify as securities and thus should be registered with the SEC and comply with strict securities laws. However, instead of providing clear, tailored guidelines for how US crypto projects could legally operate within the country under this framework, or even working with serious industry players in order to give them a fair chance to do so, Gensler did something different. He waged war on the industry, taking a number of different enforcement actions against major projects within it. All the industry has ever wanted was some clarity on what guidelines we should follow, and we can never get those answers, which led to some of the most notable companies in the industry, including Coinbase, Binance, Kraken, Ripple, and many more, being flooded with lawsuits from yours truly, the SEC. But what exactly was Gensler's real reason for drawing out these lawsuits? Well, for Binance and Coinbase, the SEC alleged that they were essentially operating as unregistered securities exchanges in the country. Coinbase, for one, countered this by saying that the SEC initially approved their operations within the country, so it doesn't really make sense for them to claim that they are illegal now. For Ripple, the argument was essentially that the project's token XRP itself was operating as an unregistered security within the US, with Ripple simply countering that it is instead a currency. Now, it is worth mentioning that Ripple was able to secure some significant wins within their individual case, which we'll talk about in a bit. However, the overarching actions by the SEC on the industry as a whole inevitably led to a crippling regulatory environment within the country. But of course, despite this harsh environment for crypto projects, industry pundits and supporters alike weren't going to go down without a fight. Day in and day out, supporters, participants, and industry leaders of the crypto space came out in droves, criticizing the actions of the SEC, and rightfully so. They believed he was exercising an unfair bias against the industry and demanded for regulatory clarity. And as time went on, it became clear that whatever reason, Gary Gensler was not going to back down. That being said, if the US crypto industry was going to survive this reign, alternative actions had to be taken. And so an all-out legal war erupted between the crypto industry and Gensler's SEC in 2023. But by the summer, crypto finally started to see some wins. In July 2023, the crypto industry scored a landmark victory against the SEC in Ripple's case against them. A federal judge ruled the sale of XRP to the general public through exchanges did not qualify as securities transactions. This decision marked the SEC's first major legal defeat in its campaign against crypto, setting a critical precedent. After this, the setbacks for Gensler's anti-crypto agenda continued to mount. By August, the SEC faced another significant loss when a US Court of Appeals ruled that the agency's denial of Grayscale's application to convert its Bitcoin trust into a spot Bitcoin ETF was unjustified. This pivotal decision signaled a shift in momentum, ultimately leading to the SEC's approval of several spot Bitcoin ETFs in January 2024, a milestone that reshaped the landscape for crypto regulation and investment. But of course, since Gensler still remained chair, his war against crypto wasn't quite over yet. In 2024, the crypto industry pushback continued, gaining traction, with markets responding to the shift. Still, early in the year, Gensler, being stubborn as he is, attempted to block Ethereum's ETF and even labeled the token as a security. Though, for whatever reason, he reversed course by May, and Ethereum ETFs were eventually approved by late July. Regardless, his crackdown continued, with projects like Uniswap receiving a Wells notice, signaling intended legal actions towards them by the SEC. In response, major players like Crypto.com and Consensus decided to sue the SEC, refusing to accept its aggressive tactics. Around this time, Donald Trump actually endorsed the crypto industry, making his infamous speech at the Bitcoin conference in Nashville, promising to fire Gensler and establish a pro-crypto regulatory environment if elected president. Members of Congress also expressed support, introducing bipartisan legislation to protect the industry. And as we all know, by November, Trump officially won the presidency, and Gensler was finally forced to resign January 20th, 2025. In his place, we have since been blessed with a new crypto-friendly SEC chair, Mark T. Ueda. Unlike Gensler, Mark intends to create a crypto-friendly regulatory environment in the US, and has recently even gone as far to assemble an SEC crypto task force, which will serve the purpose of developing a comprehensive and clear regulatory framework for crypto assets. Outside of that, pro-crypto venture capitalist David Sachs has been appointed by Trump as the AI and crypto czar, a role that's meant to shape federal policy on AI and crypto. And speaking of federal policy, Senator and Bitcoiner Cynthia Lummis has also been tapped to lead the first ever Senate Banking Digital Asset Committee, whose purpose is to focus on legislation and oversight related to crypto and blockchain tech. This being said, Trump has definitely kept his word so far in creating the first ever pro-crypto regulatory environment in the US. But at the same time, reversing the damage that Gensler's SEC did in the industry might not be the easiest task to accomplish. So there is definitely a long road ahead before we can definitively say that we've reached the promised land. And while there is plenty of speculation as to why exactly Gensler was so anti-crypto, nobody truly knows. Maybe it was so him and his buddies could stack more sats. But one thing is for certain, with Gensler stepping down and the new administration poised to bring a more crypto-friendly regulatory approach, the industry finds itself at a crossroads. While the damage caused by Gensler's SEC may not be entirely reversible, the resilience and determination of the crypto community has proven that the fight for fair regulation is far from over. But luckily, as we move into 2025, the future of crypto here in the US seems to be more bullish than ever.